Well, the market started up again after being closed on Monday. Things are looking great on stocks. In fact, everything up for the day. What's up the most for the day? Gold, 1.52%. Now, friends, I hope that you had a chance yesterday to check out the special recording we did you on our day off, a reliable way to grow your money. That's what we are trying to get you to after training with us. We want you to train with us for as long as it takes for you to put together everything we teach and everything else you've learned from the books you've read, the other things you've studied, and the practice you put in. Every investor needs to have their own method. You take what we teach and then you mold it into the time you have available, the kind of trading that you're interested in doing, the kind of long-term wealth growth that you're interested in, and you put it together and you establish a plan. But we talk about how important it is and the reason that we use the 4 ETFs that we go to every day, the S&P 500, the NASDAQ 100, 20-year bonds, and gold. Why don't we pick those? Why don't we pick oil? Why don't we pick Apple stock? Why don't we pick some other commodity? We don't do that because we want to use broad sectors in the stock market that are easy to track. We want to use bonds, which are where money goes many times when stocks aren't doing well. So when stocks start doing poorly, maybe bonds are going to be a nice inverse thing to invest in that go up when stocks are going down. And also gold, which has been the longest store of value that humans have had in our history. So again, and our magical weekly charts are unbelievable for helping you track gold and where it's going, whether it's going down or going up, particularly on, like we said, that weekly chart. So please listen to that special training. If you are a subscriber, it came in your mailbox yesterday. If you're not a subscriber, go be one. Go to chartingwealth.com, sign up. You can also find the training there under the training portion of the website. If you're not a subscriber to our YouTube channel, please make sure to subscribe there too. It helps our metrics. If you've not purchased our book, please, by all means. We're in the 8th edition and we're just about out the 8th printing. We're just about out. We've ordered the 9th printing. We have a few more 8th editions left, so please go ahead and order those. We'll get this 9th printing out as soon as they are available, but a few left in the 8th printing, so please go ahead and order those. You can find links in the show notes. And of course, go to chartingwealth.com. Look under the daily reviews that are posted every day. You'll see all the great information there available. You'll see a link to how you can purchase the book. And of course, if you want to be one of the special people that really helps us, go and be a Patreon member. All sorts of great special things for you. And by the way, Patreon members, please make sure, go ahead and start emailing us with the ETFs and stocks you would like us to consider reviewing for you this month. And of course, go ahead and start asking your questions so we can prepare for our teleconference that we have once a month also. So we do a special broadcast for our Patreon members, helping review the stocks and ETFs you're interested in. And also we have a call-in teleconference where we try to answer those things that you are most interested in. So if you want that kind of personalized training, please make sure to be a Patreon member. Okay, folks, let's jump into these markets. We start, as we always do, with the S&P 500 up for the day, 0.18%. And the first candle of this latest weekly candle, now this week, since it's a shortened week, it's only 4 days, but it's a nice up candle. The only caveat is it's just barely on this first day of the 4-day, not a 5-day candle, it's just barely pushing up where things topped off the prior week. But we see the derivative oscillator heading up and that price percent oscillator heading up nicely. So again, price movements well above the weekly and the 2-day. Things are looking good. We'd like to see that candle pump higher, particularly the wick on top being higher, much higher than the prior week's wick. We go to the 2-day chart. What do we see there? Well, we see that the prior 2-day chart ended on Friday, so this is just the first day of the latest 2-day candle, and again, it's pushing above the prior candle. Derivative oscillator gaining a little momentum. Price percent oscillator is losing a little bit of its upward movement, not heading up quite as quickly as it had been. But again, things are moving up. Price movement's well above that 2-day. We got a nice 2-day trend line and well above the weekly. We go from the 2-day to the 4-hour. And of course, we had the 4-hour bound off the red signal line back in the afternoon on Friday. And of course, things continued up on both, actually bounding off Friday morning, bounding up Friday afternoon and on Tuesday with the market closed on Monday. So up in the morning and the afternoon. Derivative oscillator lost a little bit of energy at the end of the day. So did the price percent oscillator, but still heading up, which is quite nice. And remember, the magic of the weekly vertical crossover is in effect. Once we had that crossover going up, it is just, again, it took a little bit of time to level out, but once that started, up for many days and then down for about 6 days and then bounding up, about 2 days and then bounding up since then. So things are looking quite nice and we like to see things working there. Now, those of you who are wondering, how high will things go? This is where we go back and we start looking at where potential ceilings are, where the market topped out in the past, particularly more than once. We see a potential ceiling somewhere at the 280 mark, maybe. We also have seen things, again, top out. Well, that's probably the next one there. We've pushed through the 200 period moving average, which is nice when you zoom through that. Typically, that gives you a little bit of energy, and we see the Bollinger Bands spreading out. So as far as the 4-hour chart goes, keep your eye on that. Also look at where potential ceilings can be, rough spots to push through, going back looking at both your 4-hour and your weekly charts. And when you start finding the same, we call those laminated ceilings or laminated floors, that means that you find the same dollar amount on the charts where things stopped moving up, like somewhere around that 280, 60 mark, something like that. If you see that on the 2-day and the weekly, that's telling you that's probably a hard level to push through. So always look for laminated ceilings or laminated floors. And make sure to put those into your charts. Put them in a different color so you really, really recognize those things. Just a nice little teaching. In fact, that is a great idea for me to follow up with a teaching, a training on the website. I'll look into doing that for you guys. Okay, so we're going to go from the S&P 500 to the NASDAQ 100 as represented by QQQ. And again, we see the week starting off moving up nicely. Again, price movement still a little too close to being right at the same where that wick was. We hope through the course of the next 3 days throughout the week, we'll continue to see price movement move higher, derivative oscillator gaining upward momentum, price percent oscillator heading up. We go to the 2-day chart. What do we see there? We see, again, a little bit of a cautionary note. So far, price movement's just barely above where it had been on the last full 2-day candle ending Friday the 15th. We see a red open box candle, which again is sort of a warning. It's not a red down candle with a wick on the bottom. It's a red open box with a wick on top, but it is a bit of a warning sign. So pay attention to that. We also see first day of the latest 2-day candle. So we don't call that candle yet, but it can give us some signals. We see the derivative oscillator losing momentum. Price percent oscillator looks like it's lost a little bit too. So keep your eye on the cues if you're in a practice trade there. What we see in the morning is, of course, up movement followed by some in the afternoon, topping out again about where things were in the morning. So keep your eye on things. Derivative oscillators lost some momentum, and the price percent oscillator looks like it's trying to cross back over, going down. Pretty much laminated here for several days, which again, it is our primary indicator. And when it's not pulling away from that red signal line, it's signaling some pressure to not move up. And again, we just want to be careful if you're in a practice trade on the cues Pay attention closely. Once you do that, you pull that trigger to get in and you start looking at your bigger charts, that 2-day chart is giving you a potential warning signal. So just keep your eye on things, particularly in the morning first, to see how things are at the end of that morning candle so you can make the right decisions as to whether or not to stay in that practice trade, which has done well for you, or to pull out, take your profits, and run. Okay, let's move now from stocks to bonds, and we're looking at bonds. Bonds, of course, on the weekly chart are in a confirmed up move, and we see things again. Bonds topped out all the way back on the 4th of January on that 4-hour chart. We look at a big wick on top. Things are trying to move above that, just managing to move above the candle itself. Derivative oscillators still losing upward momentum. That price percent oscillator's moving up, losing a little bit there, but still moving up. We go to the 2-day chart. Bonds up for the day on Tuesday, 0.25%. We look at the 2-day chart, and again, it's trying to move up. We look at where things topped out before, managed to move a little above that back on the 8th. So that's looking nice, just the first day of this latest 2-day candle. Problem is we don't have a crossover going up yet on the price percent oscillator. Derivative oscillator crossed positive back on the 2-day candle ending the 14th of February, but it's not happened yet. Not enough power to cross over. So continue to keep your eye on things. When this candle finishes drawing on Wednesday, we'll see just what we have there. What's up with the 4-hour chart? It crossed over going up back in the afternoon on Friday, boomed up on Tuesday morning, and then pulled back some with a spinning top. Basically means indecision tending down in the afternoon. So we see the derivative oscillator heading up, price percent oscillator moving up. So keep your eye on things. We'll see how things shake out and sort out on bonds. Don't have a trade yet, of course, a practice trade, because we have the 2-day still in a confirmed down move. And we go to gold. You know, what a beautiful, beautiful chart. Guys, I urge you, if you use freestockcharts.com, which I hope you use, the operative word there is free. I hope you will go back in time and see how beautiful this weekly chart is in so many circumstances. And again, when you couple the weekly chart with our 2-day and our 4-hour charts to help you make sure you don't get faked out and you get in at the right times, you can see how magical it is on gold. Gold, of course, crossed over going up way back in October of this last year. Big major crossover going up, and but for about 3 weeks, it's been heading up since then. And if you jumped in on a practice trade when gold did that and watched it go from somewhere around 111 all the way up, where did it top out over the course of the day? 126.79. Is that not beautiful? So again, those of you who listen to these gold ads, buy gold, buy this, hey, why not just use our chart and practice trade GLD? You don't have to hold physical gold. You get the benefits of being able to get in and get out of something that's super liquid. And when gold's looking good, practice trade it. When it's not, either short it, that is, you could look at purchasing puts on it, or just get into, again, a practice trade. We're not a stock calling service. I want you to practice these things. Either get out of gold totally, take your profits and wait for it to drop and jump back in, or do an inverse trade in an inverse fund that inversely tracks gold. You want to have some of that training, understand what inverse funds are all about. We've got a great training called Inverse Funds, How to Make Money When Markets Crash. I'll attach that at the end of today's training video. Again, love seeing what's happening with gold and how accurate things are. So gold is losing upward momentum on that weekly chart when it comes to the derivative oscillator, but that price percent oscillator, our main indicator, spiking up. We look at the 2-day chart, and we can see that it's trying to cross over going up. Now, we can't confirm this yet because there has to be another day of movement. This is just the first day of the latest 2-day candle. We don't call candles until candles are complete. And a 2-day candle takes how many days to be a full candle? 2. That's not a trick question. This is the first day of the latest one because the prior one ended Friday. Markets weren't open on Monday, so it will end on Wednesday. Then, and only then, can we make a potential call for a crossover going up on the 2-day. What does that mean? That means that then puts us in contention for jumping into an up trade on gold using one of our two methods for getting in, either jumping in on a weekly vertical crossover, that was back in October, or jumping in on a 2-day and weekly up movements where both of those charts are moving up, and then waiting for a pullback in the 4-hour chart and jumping in at that point. So we'll continue to keep an eye on things. Derivative oscillators also going positive at this time. We go from the 2-day to the 4-hour, and of course the 4-hour crossed over going up back on Friday afternoon, spiked up in the morning on Tuesday, and further up movement in the afternoon. Again, gold up 1.52%. Is that not beautiful? Folks, that's where we are as we end the day. Again, if you've not purchased our book, do so. If you want to help us more and to get more, of course, please become a Patreon supporter. You're going to get all sorts of great things. You get our training on Bitcoin and how we chart Bitcoin with our Bitcoin chart. You'll also get our long-term training where we look at the quarterly chart and figure out what's going on there and make long-term decisions for practice trades on the S&P 500. And we also have short chart training for those of you who want to know more about smaller charts, like the 2-hour chart, and how you might consider practicing smaller trades, such as, and I don't like to use the term day trading, but maybe more of sort of an option kind of choice that some of you want. I don't encourage that because big charts mean big money, and that means big trades, big long-term successful trades that are much less likely to get whacked with crazy news and crazy things happening in the marketplace. But regardless, practice it all. Figure out what works for you and your schedule, and let's continue to learn together. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.